Well, PPI, Producer Price Index, up 9.6% year over year. The day before the FOMC meeting and Powell's press conference. Boy, is this putting old Jay Powell in a tight spot. Nearly double-digit inflation in producer prices, which of course are upstream from consumer prices. Consumer prices, as we know, are up 6.8% year over year, which is the highest that I can ever recall. Of course, I'm not that old, but I can't think of. Well, that's because it was in the 80s. I mean, it's been 40 years, okay? Let's just be frank about it. It's been 40 years since inflation was this high, and producer prices, I believe that metric wasn't created until like around 2010, maybe? Or was it 2008? It hasn't been more than 15 years that producer price index has been around, so I'm sure this is a record. But what we know about producer prices is that they are a leading indicator of consumer prices, because businesses try and soak up an increase in their costs, hoping that, like it's a short-term thing. Because if there's a short-term spike in the price of some input, people don't want to gouge their customers and have to raise their prices and then lower them back down in a couple of months whenever, that shock of whatever input, cost rising, goes back down. But when you have, sustained and permanent rises in producer prices, producers can't keep consumer prices low at the old price forever. And so they do have to start to raise their prices, and that is always going to lag the increase in their costs. The only way that consumer prices ever catch up with producer prices is when producer prices finally level off, and then businesses can raise their prices on consumers to a certain point, to where they kind of reach an equilibrium, and then they can both taper off. And so in order for consumer price inflation to start to come down, of course, that's different than consumer prices actually coming down, just the rate of inflation going down. We will need to see producer prices come down, but that's not what we're seeing. We're seeing producer prices still higher than consumer price inflation. And so it's going to be pretty much impossible for Powell to come off with any sort of dovish spin tomorrow. Although, as I talked about yesterday, this is an expectations game, and Wall Street has set some pretty reasonable expectations for Powell's hawkishness. And so it would be easy enough for him to look at that, say, hey, here's what they expect of me. They expect a certain level of hawkishness in my statement and my press conference. As long as I fall short of that, as long as I'm on the dovish side of expectations, tomorrow's going to be a good day for the stock market, which, again, at the end of the day, what Powell cares about is the S&P 500 turning green. And so this means that Powell doesn't even really have the wiggle room to even pretend that he's going to fight inflation. As I've said over and over ad nauseum for a very long time on this channel, Powell will never fight inflation. What I mean by that is he'll never go beyond words. He'll say, oh, well, inflation's getting out of hand, we're going to need to raise rates. And that's supposed to trick people into thinking that, oh, Powell's going to actually do that, and then and then inflation will kind of stop psychologically, because Powell will convince people that he would put an end to inflation. But the problem is he can't do that even without damaging this sterling stock market, the paper tiger that is the New York Stock Exchange. And so it's going to be tough for Powell to even, bluff about fighting inflation. No matter what Powell says tomorrow, though, as far as I'm concerned, transitory is not dead in their eyes. Powell is still counting on inflation to be transitory. I saw something going around today that the bulls were trying to say, hey, we can consider this dovish if Powell says that he still expects inflation, if he thinks inflation has peaked. They want Powell to say that. So expect him to say that tomorrow. If you hear Powell say inflation has peaked, that's code for, hey, we don't really need to do anything to rein in inflation, which is exactly what Powell is going to do. He's going to do nothing. If anything, he will do more QE. And so Powell still needs inflation to be transitory. He's not going to do anything. If it's not transitory, well, I mean, that's a whole new ballgame. I have no idea what they can do. I mean, they can't do anything. I mean, if inflation isn't transitory, we will be living in the 1970s because Powell, it's just not in him. He is not Paul Volcker. So if we need a Paul Volcker, if that's truly the times that we're living in, and I don't know that we are, maybe we are, maybe we aren't. If we're living in the times that call for Paul Volcker, we're screwed. Which is just, I mean, it's so amazing to me that Powell accepted another term. If I were Powell, I would have taken my leave after my 4-year term was up, and I would have said, sayonara, I'm out of here. I'm leaving on a high note, and whatever bad things happen after I'm gone is the next guy's fault. And so I don't know, maybe Powell is just so clueless or so narcissistic that he can't see what's coming. But he's backed himself into a corner, and he doesn't have any good options. Because he has made it his mission to propel the stock market into the stratosphere and never let up. And that's an incredibly high bar to continue to clear year after year. The stocks have to go up and up and up at double-digit rates. And, no matter what happens, whether we continue to have high inflation, or we end up with a period of asset price deflation, or God forbid, we end up with both, we end up with stagflation, there's nothing Powell can do. If there's asset price deflation, if we start to have if stocks start to sell off, even if inflation turns out to be transitory, inflation goes back to 2% for some reason, just reverts back there and it is no longer a problem, it's out of the headlines. Well, if stocks start to tumble, and they're down 10% or 20%. What's Powell going to do? Cut interest rates? Nope, he can't do that. What's he going to do? Start QE? Oh, he's already doing QE. I guess he could stop unwinding QE. He could stop tapering QE. He could increase QE. But is that by itself really going to be enough? Nope. And if inflation does continue to run high, if we do continue to have double-digit increases in producer prices, high single-digit increases in consumer prices, or if we have accelerating inflation to where, who knows where it peaks, maybe consumer prices peak in the double digits, what's Powell going to do then? He can't raise interest rates. That would kill his precious stock market. But anyway, considering that producer prices are still higher than the producer price index is still rising at a rate faster than the consumer price index, it would seem to me that inflation has not peaked. I would expect producer prices to level off first, or the rate of inflation for producer prices should level off first and then start to go down, and then you'll see consumer prices follow. But at this point, they're both still rising. So with that said, tomorrow is going to be a huge Fed day, one of the biggest Fed days in a long time, and I will be here to share my thoughts. So with that said, I will see you folks back here tomorrow.